The paperwork was already signed. The new payment amount circled in pen on a kitchen notepad that had grocery lists underneath it. It sat there for weeks without being crossed out, just a quiet number that felt easier to look at than the old one. Nothing dramatic changed in the house that day. The same coffee maker clicked on in the morning. The same commute waited outside. But the way the month moved afterward shifted slightly, almost imperceptibly. The old payment had always arrived with a tight feeling. It was manageable on paper, but paper never accounted for the dentist appointment that popped up or the car tire that wore down faster than expected. When the offer to refinance came through, it didn't feel like a decision so much as a correction. The payment would drop. The breathing room would widen. The calendar would look less aggressive. It was framed as smoothing things out, not changing direction. At first, the difference showed up in small ways. The checking account balance stopped dipping quite as low right before payday. The grocery cart filled without the internal arithmetic running quite as fast. There was no celebration. It just felt calmer. Bills still went out. Work still demanded the same hours. The house still needed repairs that got postponed anyway. But there was less pressure packed into each month. The term, though, stretched. 30 years reset, quietly. The end date moved further out, but it didn't register as time in any tangible way. It was just a number in the fine print, far enough away to feel abstract. The focus stayed on the present month, the current cycle, the immediate relief. That was the part that showed up every 30 days, so that was the part that mattered. Years passed without anything breaking. Raises came slowly, sometimes not at all. The payment stayed the same, which felt like stability. Friends talked about being ahead on their mortgages, about being almost done. That language sounded foreign. The house felt lived in, not owned outright. Ownership still felt conditional, tied to work continuing, health holding, nothing going wrong for too long. The lower payment allowed for other things to slip in. A slightly better car replaced the old one. The loan fit comfortably alongside the mortgage now. The numbers stacked without colliding. A family vacation became a regular line item instead of a rare event. None of it felt irresponsible. Everything fit. The month balanced. That was the standard being used. When the kids got older, expenses changed shape instead of disappearing. Activities replaced daycare. Insurance premiums crept upward. The house needed a roof sooner than expected. Each time, the mortgage payment stayed steady, a known quantity. It was the fixed point everything else adjusted around. The idea of paying extra toward it surfaced occasionally, usually after hearing someone else mention it, but it never stuck. The logic always returned to flexibility. Cash on hand felt safer than sending more into the house. At some point, the refinance stopped being something remembered as an action. It became the baseline. The old loan terms faded. The original payoff date meant nothing. There was only the current payment and the next one after that. The bank statements blended together. The interest portion still dominated the early lines, but that was easy to ignore when the total amount leaving the account stayed manageable. As careers matured, income peaked and then flattened. The growth that had been assumed never really accelerated. Work remained steady but demanding. The idea of a future without a mortgage still existed, but it felt more symbolic than scheduled. The end date was still out there, but closer now in theory, farther in reality than it once had been. When college tuition entered the picture, the house became part of the conversation again. Not in terms of selling, but in terms of capacity. There was equity now, technically. Statements showed it clearly. But accessing it meant starting another clock, another monthly obligation. The previous refinance made that feel normal, almost routine. Extending timelines had become familiar. The house itself aged alongside the family. Floors creaked more. Appliances failed with less warning. Repairs were funded gradually, always balanced against the same mortgage payment that never shrank fast enough to feel lighter. The payment didn't strain, but it didn't disappear either. It was always there, like a subscription that never expired. Retirement planning conversations started quietly, usually late at night. Numbers were run without much emotion. The mortgage line extended further than expected. The idea of carrying it into retirement wasn't shocking, just slightly disappointing. It wasn't framed as a mistake, it was framed as how things unfolded. Friends who had not refinanced talked about being done earlier, about redirecting payments elsewhere. Their monthly budgets looked different now. Less fixed obligation, more discretion. It wasn't envy exactly, it was an awareness of divergence. Two paths that started similarly had drifted apart slowly enough that no one noticed until much later. The refinance had done exactly what it was supposed to do at the time. It reduced stress when stress mattered most. It allowed the household to function without constant trade-offs. It kept things stable during years when stability was scarce. That part was undeniable. The cost showed up much later, spread thinly over decades, never sharp enough to trigger alarm. As retirement got closer, the mortgage balance still felt stubborn, smaller than before, but persistent. The monthly payment still arrived, unchanged. It occupied mental space that had been assumed would be free by now. Adjustments were made, contributions shifted, expectations softened. The house remained central, not as an asset to leverage, but as an obligation still being met. There was no single moment when the long-term cost announced itself. It revealed itself through comparison, through timelines that didn't align anymore, through the realization that the house would likely be paid off later than imagined, and that working longer was quietly connected to that fact. Not directly, not dramatically, but consistently. The refinance had traded intensity for duration. The pressure was lower, but it lasted longer. That trade had been invisible at the beginning, wrapped in relief. By the time it became visible, it was already integrated into everything else. Undoing it wasn't an option. It wasn't even a consideration. Now, the payment is still circled on a notepad, though the notepad has changed. The number looks familiar, almost comforting. It's part of the rhythm. The end date is closer now, but still not close enough to feel real. The house remains lived in, still not entirely owned in the way that was once imagined. Nothing about the decision feels reckless when remembered. It fit the reality of the moment perfectly. The cost didn't come as a penalty. It arrived as a quieter future that required more time than expected. Not worse, not catastrophic, just longer. And the month keeps moving the same way it always has, with the payment clearing on schedule, the balance dropping slowly, and the calendar continuing forward without marking what might have been different.